RationalInvestor.com's Daily Brief. The answer to your question is learn the goddamn process, trade your trading plans, don't take too much risk on any one trade, and just let yourself get rich. Hello, everybody. Welcome back to the RationalInvestor.com's Daily Brief. I think actually we're going to do a little bit of a change here. Thank you very much for your feedback actually yesterday from the video. It's clearly obvious Brian's having a bit of a hard time getting this down to like 15 minutes. Sure, I'm trying hard. But I think what we're going to do here, maybe I don't know whether we need feedback or not, but I think what I'd like to try and do here is maybe we're going to do these daily briefs inside the Zoom call, and then we'll record it. And then after the fact, Chris and I'll go through and condense it down to that 15 minutes and get rid of all the rants and all that nonsense that I keep injecting into these live streams, which I think unfortunately makes it that this video just won't go mainstream. And as a result, they, limited audience, a few hundred views, which, is great and all. But I mean, to get this TRI thing going, we really got to get these YouTube videos up in the thousands. So don't be surprised if over the next few weeks, you actually see that we do a bit of a format change here with regard to how we do this. And hopefully, people like Norway and stuff like that, maybe we can convince you to come back on the site and hang out in the actual Zoom call with us, all you longtime site participants. So just FYI, just be aware. I definitely think we're at the stage now where I think we have to change things up a little bit, try and see if we can get the viewership up here a little bit, because what we've done is clearly not getting the job done. So having said that, I do think that there is value in these daily briefs, but they're still a little bit too long, a little too much of Brian's rhetoric. This kind of stuff doesn't need to be said on these daily videos. People don't, if they're tuning in to see what's going on in the market, they don't really need to hear this kind of stuff. So just an FYI for you on that regard. With regard to the itinerary, I actually got quite a bit of feedback from you guys yesterday, so I appreciate that. I got about, I don't know, half a dozen or so comments. And on balance, the comments where they kind of like the itinerary, I'll try as hard as I possibly can not to make reference to the lower right-hand corner there, if there happens to be something on the chart. Again, if we, in the after edit, we might, sort of edit that out. But anyway, the point being that I think the size, people had said it could be a bit smaller. So I think Chris reduced the size a little bit there. But I think on balance, I like the idea that you guys should have a pretty clear idea of what we should be talking about. And we might even in the after party, I don't know, maybe even put timestamps on these things. So if you just want to fast forward directly to when we talk about the individual topics, that might make it a little more user-friendly. So let's get on with the report. It's 12 minutes past the top of the hour. We'll try and do this, like 15, 20 minutes kind of idea, which means we'll probably be here at quarter two. But what the hell, see if we can give you some value here today. So first things first, of course, I always want to check in with the breadth and the dashboard. Interesting to see that, of course, we had the broader market kind of roll over there the end of June, and we've been kind of just floundering here breadth wise. As I've said to you before, the way I like to use the breadth indicator is as an indicator reading. And if you want to trade the S&Ps, one of your reasons to justify taking a trade, breadth of the market isn't really that happy right now. I might argue that, when we see breadth data kind of like this, I might even call this just sort of flatlining. I think it actually does correspond well with the fact that, here is the 50 line on maybe we can get Stuart to put in like a dashed line off the 50 line. And it's really like a neutral reading. Yes, short-term breadth is lower than medium term, but the proximity to the 50 line itself, it kind of feels like, the market's just sort of like, maybe call it like imbalance to slightly negative. Yeah, it's probably the way that I would interpret that. So not really seeing anything too extreme in the market right now. I'd also say too that we have a semi-annual Humphrey Hawkins testimony here by Jerry, I'm thinking the U.S. Federal Reserve Board chairman, in front of Congress today and yesterday. And the rule is that, especially in these kind of situations, for God's sakes, don't trade, because the algos, and literally you could see right on the open this morning, the algos were just ripping the market straight up, cleaning out the highs, straight down, cleaning out the lows, just back and forth, because 90% of the people, like if you probably called up like a broker right now, they'd be like, look, I can't talk, Humphrey Hawkins, call me in an hour when it's done, or I'll call you back. Click. Okay, what's he saying? So I think on balance, this feels very much like a very typical summer market. We are on the other side of the big July 4th holiday weekend. We've been waiting for this for a while. And I think it's just really a question of, when does the summer silly season kick in? I don't know whether we're going to really see any sort of face rip, moves to new all-time highs and things like Bitcoin. And I do think that the stock market is slightly skewed because, the biggest 4 or 5 companies in the United States represent such a massive part of the stock market that, you get these sort of anomalies where, you might have a day where just a few stocks are moving up and the stock indexes make new all-time highs. And you're like, what the heck is going on here? And unfortunately, it's just because of just a few culprits. I can see the Humphrey Hawkins. I don't know whether Humphrey Hawkins is done. They might be over anyway. There's Jerry, and you can see all these people blabbing away. So I spent most of the morning just sitting, listening to Jerry and listening to the politicians. I didn't really hear anything startling. So you can see our under our econs, even the econs, Humphrey Hawkins is our category here. And then topics of the day, Fed speakers. I don't know whether we have a heck of a lot of other speakers talking today. I go through a regular routine. I kind of slept in this morning a little bit, gave myself permission to slack, because I'm really not supposed to trade real money anytime Jerry's speaking. And anytime I do trade real money when Jerry's speaking, I lose money. And, I even hunted a short setup there on crude and I got stopped out. This was a paper trade, so it wasn't damaging. But, I have a strict rule. I'm not allowed to trade when Jerry's speaking real money. And that was probably a good idea, because I tell you, man, this market was nasty this morning. So we talked a little bit about the breadth. Like I said, kind of neutral reading right now. I don't think it's overly bullish. I don't think it's overly bearish. And really, it's just simply a coin toss. Having said that, we're on the other side of that seasonal window. So since we're on the other side of the seasonal window, I think the bias actually has to be back to the upside. And I was mentioning there a moment ago, I thought I had it on the screen here. Yeah, I guess we'll just show you this, the breadth here. It's one of these kind of markets where all it takes is just a little bit of bullishness out of your tech names, and the NASDAQ goes flying higher. I guess on balance, everybody's enjoying a bit of green here today. So, yeah, ironically enough, the only ones that are actually unhappy here, it seems, are Visa and MasterCard, and Amazon and Netflix. Other than that, well, actually, I guess there's a bit of red in here as well. Actually, it's interesting. The screener data And unfortunately, good old Fjord's on vacation right now, and this still never been closer. But the screeners, actually, I was quite surprised. I would like to talk to you all on a regular basis about this report. It's still got growing pains. It's remarkable how difficult this journey has been. Anyway, here's our daily report, and you can see all the individual screeners that I have in the report. So we have the breadth, and as I said, a lot of reading. What we're getting out of the breadth is fairly neutral readings. Some of the fast readings are starting to get down into the oversold camp, but a lot of them are just sort of sitting mid-tier, especially all these slows right around the 50 line. That's basically a neutral reading. It's interesting. Some of the sector ETFs actually look a little bit toppy. But the signals unto itself, I was really interested to see that Intuit here, and they must have come out with a bad earnings number or something like that. But I was surprised to see that there are actually some tech stocks that actually are shorts. So that actually surprised me a little bit here today. I would show you this site, but unfortunately, Seard's away, and obviously something is broken here. So when I load this up, we're getting an error message. So we're just going to have to wait until Seard gets back from vacation to fix that, which kind of sucks. But anyway, it is what it is. Never been closer. Anyway, not a huge amount of signals that I really want to dig my teeth into here. I don't trade these European stocks. We've got that in there just for you Europeans. So, you may want to surf through those. Interesting to see. I think mRNA, isn't that Moderna? I'd be curious just for fun. And again, this is the kind of stuff that if we just recorded this, I'd actually edit this out for the public broadcast because it's kind of very time consuming and not really and I would imagine people just watching this for like clickbait and stuff like that, they probably would lose interest in this very quickly the way that I'm doing this. But there was the Intuit chart. I pulled that up there this morning, and I have to say, that's not a bad sell signal. Keep in mind it came in here, but the market, I mean, that's a nice little inside bar failure there. That's a doji. I don't know whether I'd call that a gravestone doji, but I would definitely call that a 3-bar fractal. So you could make the argument there was a pretty nice little sell signal yesterday, and look at the damn stock just gapping lower here. I'd also say too, we had an incredible buy signal on the system coming out of last week. I mean, when the system's working, oh boy, the signals are beautiful. And unfortunately, this is an absolute perfect anecdote on this totally messed up economy that this little communist bastard dictator in Ottawa, my capital city of my country, has sort of created, where now slumlords are actually going to do really, really well here going forward. And so slumlord proxies are just kicking it here. So signaling system working. When it's working, whoo boy, these signals are fucking awesome. Thought it was interesting. Yesterday we had a sell signal come in on the report on this FANG. It's actually a really good trade location. Nice 3-bar fractal. I'm not quite sure if I have that momentum signal correct. I don't see an M there, but nonetheless, it is interesting to see how this is an energy stock and it's actually topping out here. These guys might be more involved in the natural gas business though. And I think natural gas has been coming off a bit here. Yeah. So anything that's sort of natural gas related, you can see we were kind of hunting bot setups, and actually really good an anecdote of that bot. 1 low, 2 lows, 3 lows ran up, tagged the 50% of that anticipated move, which means you move your stop to scratch, and boom, you got stopped out at scratch. Next plus in 10 minutes. And if anything, there's a really good analogy of why you have rules to move stops to scratch, because as you can clearly see, this thing's just melting down here. But anyway, interesting that the screener had picked up the other day as a short. And I got to say, trade location, nice price structure. I just don't know about the indicator confirmation, a little bit up in the air on that. But it is an interesting vote in that natural gas business. It does look a little bit heavy. We have been doing our report up on BABA because if anything, I highly respect our CTO's let's call it fundamental skill set within the technology space. And he likes this stock. I don't know whether I'm really a big fan of China. But nonetheless, he's very interested in. I think our report makes a pretty compelling argument. Not necessarily that we're thinking new highs here, more like, and again, yeah, see, look at it, I already hit 15 minutes, so we'd already be in editing mode. Well, anyway, I guess, well, maybe we'll talk about that in the after party. Who knows? But anyway, we're doing up a really nice report. It's about 4 or 5 pages on why Baba actually looks like a half decent investment idea. And simply put, if you actually zoom out and look at the higher time frames, man, there is a lot of room for this thing to move up. Just good old WD GAN 50% levels, $188, and here we are down in 70s. So is there any opportunity to make some money here? And that's the irony of all this is half the time in this game, you got to be buying when they're crying, selling when they're yelling, right? So screeners are trying to do their thing. Our research report, I think this is very interesting. The options prices are a little bit high for my liking, but nonetheless, I'm going to see if I can try and sneak on a position here for TRI so that we can at least say that we are long this thing through the options market. We talked about Humphrey Hawkins and just very briefly, just reiterate the message. It's actually interesting because he was even saying, well, the economy's going, and his take was the economy is going at 2%. I did listen to another analyst yesterday who actually said that he thought the US economy was growing at 1%. So it is interesting to see the difference. Geez, I got the stock market just booming here. So I guess maybe he's done talking now. And actually, I think I heard them say they had a hard stop at 1 o'clock Eastern, I guess, which would be 10 o'clock our time. So I guess that's in about a half an hour. Anyway, look at the culprits, and gee whiz, man, I was all bullish of that damn Intel, and Intel now is taking off here. So I'm a little bummed at myself. Wasn't able to sneak my way in. But I had my bids down here in the 20s, and you can see what Intel's doing here. Oh boy, I sure hope I get a pullback at least back to these levels to sneak my way in there. I really like this thing, just simply because, in simplest terms, this thing has not participated in any of the stock market rally. I mean, this is going back all the way to 2013. I mean, you could argue that really we're trading at prices that you could have bought this stock at like 2014 levels. I mean, basically a decade. This company's done nothing. And what's really interesting is if you zoom out to like the entire range, like going back to 2000 itself, we're a million miles away from the old highs. So I do think that there is some money to be made on this company. Anyway, hopefully, wish me luck if I can sneak my way in there. One thing that actually I think, keep in mind, with the way the breadth indicator is acting, I mean, it isn't happy. There are a couple sort of warning signs here that I think a correction needs to happen here in the broader market. The first is that our Dow theory is starting to get worried again. So the teal line here, of course, is the Dow, and the yellow line is the Dow transports. And you can see they are clearly going in opposite directions. Crude oil is catching a pretty nice bid here today. And it does look like over the near term, crude does want to press back up against those old highs. And the transports are kind of reflecting that there's something disconnecting here. And Dow theory just simply says if you see a move on the industrials to new highs or breaking out here and it's not confirmed by the transports, this is bullshit. This is a trap. Was also interesting too, kind of a side topic, and maybe we'll talk about it in the after party. But we run an education program here at TRI. Yesterday was our level 3 program, and I teach the level 3 program, the advanced students myself. And we did notice that there's a little bit suspicious activity going on in the VIX index, where the VIX index right now is actually kind of at historical low levels. So we have the transports flashing a warning sign. Yeah, that's not what I wanted. Where did the VIX go? I thought I typed it in here. VIX. Are you going to load? Volatility index. Little bit more of an advanced concept. So consider this a little bit of a teaser. Maybe come and join our community, take our education program. We'll teach you a little bit about how to interpret open interest data on options. I tweet this stuff out all the time, but nonetheless, it's a good opportunity for students to learn how they can incorporate this into their trading plan. So you can see right now the VIX, right? And this is basically just is the market freaking out or is the market relatively complacent? And let's see, what is the chart we have to use, right? So if we look at the VIX itself, we can see that it's bumping along down at the bottom end of its range. We're not at historic levels, but we're pretty damn close, sitting here at 12.5. And of course, there's the stock market boom. And you can see when the stock market melts down, the VIX goes crazy. Even this one, this was about a 5% correction. VIX jumped up quite a bit. And actually, I would keep this in mind because I think this is what needs to happen here in the stock market. Why? So notice the VIX numbers here, 17, 18, 19 kind of idea. And then, once we got there, then the market calmed down, put in a W, back up we go. That was about a 5% correction from there to there. If we go and actually look at the VIX data, is it a surprise that the VIX is sitting where it is right now, heading into today's options expiry or tomorrow, one day? Put options, this is where the institutions are willing to take positions. Oh, what a big surprise. 12.5 is where they wrote the puts, and where's the VIX right now? 1247. Oh, what a shock. So nothing really out of the ordinary there. But notice when we go a little bit further out, and we covered this topic yesterday in class. That's why it sort of came to my mind for this video here today. If we go out to say the middle of August, and we look where those heaviest puts are, we kind of go, oh, hello, interesting. And you can see quite a bit more interest. Whoa, what the hell's going on up here? 15? 200,000 contracts? That's the anchor. So all this is fluffy. My hunch is they want this thing up around that 15 area into that options expiry for, what did we say this was? This was for August, yeah, so next month. And then as we go further out, this is September. Where's the heaviest open interest? Interesting. Right now, it appears to be 13. So it almost looks to me, and then, if we maybe even go out to like October, as we get closer and closer to the election, where is the heaviest open interest here? Interesting. Look at this. 17. Wow. Interesting. I mean, obviously, it's not as big a number as those 200,000s. But I get the distinct impression that the powers at B are going to mysteriously inject a little bit of volatility into our lives. And of course, it serves these guys' purposes. They already know exactly what's going to happen. So it is interesting to see that we do see quite a few prints up here, heaviest open interest here on these puts up around this 17. If we go through all those options, I just looked at a couple series there for you just to give you an idea. So just the point being that, that you can see where the line is. But, if we work our way 15, 17, you can see that that's going to be one of these types of scenarios, which is one of these kind of scenarios, which would ultimately help clean up the breadth, which would probably clean up that Dow theory problem that's building right now. And if anything, this makes perfect sense that when you start to see this, it means we're getting awfully close to some sort of top. And, if we circle back and look at our ES chart, which we've been looking at in earnest for a while now, we've been talking about the fact that Willie is ridiculously overbought. We've hit a bunch of bullish A, B, C, D targets. It doesn't matter, we can go back all the way to last fall's eclipse and how that set up A, B, C, Ds. 127s up here probably could get tagged. Anyway, I would just simply say the market hasn't topped yet. Breadth indicator, not really overly happy, kind of just wishy-washy, pointing slightly lower for the broader market. Dow theory disconnecting. These things are moving to new highs. but they're moving to new highs, being egregiously overbought. RSI is not supposed to be above 70. If we get a reading up there, that does mean overbought. But the thing is that we haven't broken yet. I don't know what the catalyst is going to be to actually cause this thing to roll over and start correcting, but it's not there yet. All we can just simply say is, look, at the market is stupidly overbought, and there's a lot of anecdotal evidence out there that trouble is brewing, and it kind of makes sense. I mean, look where the hell the 200 period moving average is on this ES. It's all the way down here. So, as that VIX study suggested, could we see a 5% correction in the stock market? What would that take us? That would all that would do is just bring us back into 50% of this range, which isn't really out of the question. I don't think that this is crash scenario, and I don't think there's any way in hell they're ever going to let the stock market crash ahead of an election. But at the same time, too, I definitely think that things are getting a little bit nosebleedy out there. And unfortunately, us as like longtime market participants, we actually have to respect the fact that Willie is giving us a very clear signal that we really have no business investing in something like the S&P 500 index right now. This is getting dangerous here. So we just have to leave it alone and just, waiting for Godot. We'll finish off this broadcast here with just a quick comment about the corn and crypto. It was interesting through the semi-annual Humphrey Hawkins testimony there. One of the congressmen did very briefly mention crypto, but in the past broadcasts, oh boy, sometimes there would just be constantly crypto this, crypto that, crypto this, crypto that. But very brief mention, just you're going to regulate stable coins at some point. And Jerry's like, yeah, we're getting to it. It's on the to-do list. And that was about it. So, we had that news about the Germans liquidating crypto and Bitcoin. I think that is half the reason why the market broke here. I would also argue, too, that, following the big fundamental event, we were pretty overbought. Same anecdotes about, if Willie is stupid, we got no business buying. So, this is the same conversation as us thinking about going and buying the stock market right here. You're kind of asking for trouble. A year is the trouble. So things have broken. And if anything, when this does start to bottom out and we start seeing W's, then we'll know the game is back on for Bitcoin. Right now, I would say, momentum, not really that exciting. It was interesting. I even heard CNBC make reference to the fact that Bitcoin's RSI study is coming out of the overbought zone. Structurally, it looks pretty bad. There are no W's here. Keep in mind, this is a weekly price chart. So on balance, the writing's on the walls. And what's ironic is they even said, as our risk on, risk off proxy. So they're actually using Bitcoin as their sort of, if Bitcoin's trending higher, then it means risk on. If Bitcoin's trending lower, then it means risk off. Incredible how the public now is starting to think that way. But what I would just simply say is we are in correction mode. It's obvious. We're going from the upper left to the lower right. Just don't fight this stuff. And really what we need to see for us to be like, hey, this is a bull market, is we got to see some W's here. Now, this is a weekly chart. So, this is going to take probably months to clean itself up. I wouldn't be surprised if this thing just consolidates as we go through this whole election window. And coming out the other side of the eclipse window, the election event, I think that's when the bull resumes. So, we're not really in a huge hurry. Did have a couple short trades that actually hit some profit objectives. So if anything, when you see that happen, it's actually not a bad idea to actually start thinking about dead cat bounces and us moving the other direction. I think you could make the argument, just like we did with the S&P and that 50% rule. This is just WD GAN 101. Don't overthink this stuff. Keep it simple, stupid. There's the 50% rule of this trading range. Could we bounce here through the summer silly season? I mean, you've heard me talk at length about how I was looking for some some sort of pivot through that July 4th holiday weekend, and all you Americans who are watching, you wrap yourself in the flag and rah rah capitalism and all that kind of fun stuff. So fascinating. Where's Brian's birthday? Right here. So there's Brian's birthday. Big dump into Brian's birthday. Thanks, Brian, you doofus. Market counter trend rallies right back up to the top end of the range, puts in an absolutely beautiful M, and then right, pukes out. And we did actually take out this low. This is a great analogy of them. We went after the stops, and now we're probably going to grind our way back up into the middle of the range here. And interesting enough, we do have a W actually working. So that means that we can start thinking about things like chaos theory and Foggenbaums. And at any given point in time, all of you should just get into the habit of asking, what is a 50% rule? That is like the easiest technical tool anybody can sort of subscribe to, because markets like to retrace 50% of their previous move. Then I would just simply say that, I think this is, yep, it is drawn. So if I did want to short this thing, where might I want to short this thing? Well, you can see the only question is it drawn correctly? It looks like this is off a bit. Let's see how I can do this. There. Is that off that low? No, it looks like it's off of this low. There? Oh, yeah, there it is. Okay. So where is our reload short zone? Well, hello. So there's Mountain Man. And interesting, look how close Mountain Man is to that Foggenbaum. I like the idea that the market's probably going to rally right up into this sort of that high there, right? And liquidity pools probably going to go after that wick, right? There's probably a bunch of stops up top there. So we'll see how we act. And I wouldn't be surprised if this is your summer silly season rally. Now, maybe it might not be this quick, right? I mean, who knows? This might take days, weeks, months to play out. You never know in this crazy game. But I don't mind the idea that we work our way up. You can see there's going to be a whole bunch of technical hurdles to go through. And each time we bang into one of these technical windows, like this was the 200 SMA, why did the rally stop where it did the past couple of days? Why is the market having difficulty right now? I think it's because it's trying desperately to recapture that 200 SMA. See the 13 EMA right now. In fact, actually, you can really see this on Bitcoin. You can see right now, look how the 13 EMA and the 200 SMA right now are basically like a brick wall of resistance. This is also a really good example where previous trend lines, what once was support, now can potentially become resistance. So I would actually say that there is an intra-bar double bottom working here on Bitcoin. I did think that original news on Bitcoin was a bit of a panic dump, and we saw on a whole bunch of crypto names tons of these hammer candles, dragonfly dojis, whatever you want to call them. I don't think you'd call that a doji though, but definitely hammer bottom. So it did feel like there was some sort of capitulation event through that window. The only problem with Bitcoin though is if we change this to a line chart, notice, hey, where did W's go? And as I pointed out there a second ago, and Julian actually had pointed this out when he was talking in the lounge to the community, that this really smelled like a big fat stop run. There was a huge liquidity pool just up here. You know, all the noobs, they just quickly moved their stops. Maybe they were short off this top. They don't want to see profits disappear, so they quickly move their stop up here. And I think that's all this candle is. They went after the stops on the upside. And then once that was done, there was just no more buying. So I'm not as actually excited about Bitcoin. And keep in mind, Bitcoin does have this really well-defined structural failure here. And of course, remember we were talking there a moment ago about the weekly price chart. This looks pretty nasty. But summer silly seasons usually aren't about Bitcoin. They're about this DeFi and Vitalik and Solana. When's Solana going to get rocking and rolling? You can see, and you can see the conversation I was having with the community yesterday. You can see these. This is going to be a W within a W, which means that what we're really going to see probably the summer silly season, and you can hear my inflection in my voice going up. So now you know that I'm getting excited. You want to make some money in the market. I think we're going back to this kind of market. and the deck screeners. And this is where Dan Blockmates and, Colin over those guys and stuff. Man, I think that we're going to go right back into this kind of craziness through the summer. I don't think that the big cryptos are going to do a hell of a lot, but it's the same logic on a lot of the little shit coins. I mean, God, there is some beautiful charts, even on the junior poop coins. So, we have this matrix. These are all the names that we have on the books in various state. Here are all our, fundamental names. Look at this. I barked at you guys about this hello. And really, I should be talking in the after party to you about this, but you can see, look what's happening here. Down, up, down. Oh, Nelly. So I don't know. You want to make some money from trading? I mean, look how freaking far this thing has fallen. So it's these kind of names, like hello. What do these guys actually do? Well, it's about a TV show about crypto traders. Oh, okay. Well, what the hell? And is that all about like meme coins and all that kind of fun stuff? I think so. And I think that this is the kind of environment that we're heading back into. So we should have some fun here over the next couple months, folks. I mean, you can just see W. Look at this. ATHs got a W working. So, here we are. Anybody want to make some money from trading? All right, why don't we leave the broadcast at that? 9:44. So again, not even remotely close to 15 minutes. This is probably why we have to record this, then go back and cut out all the extra bullshit that Brian really didn't need to talk about here today. And then we'll put it out on YouTube, and hopefully maybe that'll actually get maybe the views up a little bit. So anyway, okay, have yourselves a great day. PMA for the win. All the best. Hugs and kisses. Let's head on over in the after party and let's have some fun chit-chatting about various different names you guys and girls are interested in, and houseplants too. And have yourselves a great rest of your day. PMA for the win. All the best, and bye for now.